Righto, Money Miners, last episode of the year. What a year, boys. But from me to you two, thanks for bloody everything.
Mate, thank you. It's been a ripper.
Saving me ass.
And we're going out on a high note. We've got a great interview in store, don't we?
Mate, couple of blokes we've got a lot of respect for the articles they write, the potty as well. And it was a theme from the start. Peter Kerr and Anthony Macdonald from the AFR.
Yeah. For those wondering, Peter Kerr writes the metals and mining. He covers the resources part of the world. And Anthony, he was for over a decade Street Talk, and now he is one of two Chanticleer writers.
Yeah, he's on the Chanticleer potty, and he wrote a great article about IGO the other day covering the whole lithium selling issue there. So, yeah, no, we've got a lot of respect for these guys, and we're absolutely flattered they come on for a potty.
Them on awesome. to chat about like the year in review, right? Let's just look back at 2023. What can we talk about? The big themes, the big deals, and what does it mean for this year? But importantly, what does it mean looking ahead as well? These guys have pretty good insight because they write about this. They got good access to information, being journalists at a credentialed media organisation, mate. Unlike many of mine, we're still building
their contact list must almost be as big as yours, Matty.
Oh, mate, wouldn't mind chucking that on a hard drive.
It's cool for us to reflect back as well, right? Because 2023 has been a big year for us. In fact, having these two guys come on our podcast for our last episode of the year, it's a little bit of a throwback to our first episode of the year in some ways.
Oh, let me guess. I reckon you're going to play it for us, Trav.
I am. I want to play a snippet from our very first episode this year because Anthony Macdonald features on it. He didn't come on, but we played a snippet of his.
JD, something caught your attention the other day from our East Coast friends.
That's right. So Liontown making headlines. I think everyone in the mining sector has seen the news. So they came out and told the market that they'd rejected not just one, but 3 bids over the past half year. We were listening into the Chanticleer podcast down at the AFR, I think they best captured it in the snippets you're about to hear.
Oh, yeah, I was just about to say, I've conveniently compiled a couple of snippets from
playing a snippet of a
Chanticleer podcast. Here we go.
Whenever anything rises like that, there's always naturally going to be a fair bit of skepticism. The skepticism is particularly in the institutional investor market. This thing's come out of Perth. On the East Coast, the big brokers and the investors in Sydney and Melbourne can be wary sometimes of things that come out of Perth. There can be a bit of hot air around it. They're diggers and dealers, right? That's the mining sector. These guys have either got lucky or knew something that everyone else didn't, but they're onto a good thing.
The personalities versus the East Coast skeptic.
Here we go, lads. What do you reckon about that? How do you feel?
Personalities, that's a new one for me. I don't know about you guys.
I've never heard it before.
It sounds like there's a good opportunity for a thoughtful West Coast-based media organisation to pop up and fill a bit of a gap there.
Trav, do you know of any good ones floating around at the moment, mate?
Maybe try and build one.
Oh, that's cringeworthy to listen back to, isn't it?
We need to cut this. I can't.
How funny is that?
Trav actually sounded all right there.
Yeah, we've got one of them on here today, Anthony Macdonald, and then Peter Kerr as well. So, mate, rip and chat.
Awesome to have them both on. I'm keen to share this one with the money miners.
Oh, I'd tell you what, when we go over and catch up with these guys, I reckon by next year there will be a massive expansion in the Brooks Airways fleet, and they will be able to fly us directly to Sydney and Melbourne to catch up with Peter Kerr and Anthony Macdonald. I reckon we do a bit of a media roadshow.
Oh, that'd be cool.
And head over there, right on with the big Brooks tail going over. Oh, mate, just flying over the Nullarbor.
Absolutely, guys. We've got to do a money of mine trip over east, Melbourne, Sydney, Brisbane. Matty, you can come up with a creative name for the trip, but Brooks Airways is going to send us over.
Yeah, no, I'll get into bed by midnight every night. Piece of cake. But until Brooks Airways has this rapid expansion into domestic travel, they are the new player in FIFO travel in West Australia.
They're not that new. They've been doing it for years. It's just rebranded. Brooks.
The prominence is just like really,
the marketing
it's
on
really
our
taken off.
It's really taken off.
It's really taken
They're
off.
growing.
Mate, Stewie Brooks, the aeronautical prodigy, when the owners maintaining it themselves. Like,
That's it.
no one takes so much pride, and you want pride in maintenance on aircraft.
When your name's on the plane, mate, you got it. You take pride in it.
He's literally, if something happens, it's on him because of the Brooks name. So
That's maximum accountability,
and that's what you want. Talk about shareholder alignment,
mate. That's bloody safety
That
alignment.
is safety alignment. That is, tell you what, I would not feel in safer, more competent hands than we are with Stuart Brooks.
So they've got a bunch of 9-seater jets. You need to get anywhere in the goldfields.
Oh, the Land Cruiser of the sky, JD.
That's it, the Land Cruiser of the sky. Get in touch with Stewie Brooks.
Mate, they got Learjets if you're rich and want to go to Bali.
Yep.
Mate, they got everything. And mate, thanks for the support all year, Brooks. Just landing on shit runways because they can. Because they got the Land Cruiser.
Cheers, Brooks.
Cheers, Brooks. Now, I've harped on about mesh and bolts and the real underground focus of DSI, but you know, boys, you see that Linetown portal that got cut? It was all bolted and sprayed.
It's looking pretty schmick.
Some underground mines do not have the luxury of having semi-competent ground when they first enter via the portal. It could be absolute pus, absolute dog shit.
I reckon DSI could do something for them.
DSI have got a solution. Mate, they also do bloody steel sets, like the big, like just freaking pretty much creating it's like a cross-city tunnel sort of infrastructure to get you through that first shit bit. So like beyond mesh, beyond bolts, they've got bloody steel sets, lattice girders to actually get you through. We'll flick up some pictures of it. Mate, till today, I didn't even know that DSI had that capability. But like, I am surprised every day at what our partners keep bringing to the table.
You've been chucking in DSI orders all this time, mate, and you haven't even gone with the steel sets.
I haven't. I can't believe I didn't tick the steel set box.
Unbelievable.
It's unbelievable. So, mate, if you're bloody cutting a portal, hit up DSI. They will get you bloody those sturdiest bloody entrance, safety, protection, whatever it's called.
If you got do it once, do it right.
Do it once, do it right. It's going to be there forever, JD.
That's
the first thing you look for. As soon as you enter that mine, the first thing you will see is a DSI steel set or a DSI lattice girder. So look, take control of investors, take control of your share price and put a DSI steel set because that will be looked upon favourably.
Yep,
it's as simple as that.
When you're in the checkout, just click that one as well.
Mate, we're going into Christmas. A lot of trucks going along highways. Get your DSI order in. Don't run out of ground support.
Cheers, DSI.
Love your work, DSI. Thanks to both Brooks and DSI for the support this year. Right, let's get into our chat with Anthony Macdonald, Peter Kerr from the AFR. It's a ripper. Here we go. Righto, buddy, what a special treat to finish off 2023. We've got, I'd say, talk about some GC friends in the media industry. A couple of blokes we've got a lot of bloody respect for. One bloke that got mentioned in our first ever Money of Mine podcast, though I will highlight, I don't think he's mentioned us yet, so we'll get to that later, Mr. Anthony Macdonald. But Peter Kerr and Anthony Macdonald from the Australian Financial Review. Lads, welcome to Money of Mine. Great to have you on.
It's an honour. Thanks for having us.
Yeah, great to be with my favourite personalities.
There we go.
Mate, it's the Wild West over here. Just wheeling and dealing.
I've taken you. Don't worry, that hot air hasn't gone anywhere, mate.
I've always wanted to say long-time listener, first-time caller.
Well, yeah, good to see you in colour instead of the black and white little thing at the top. And look, special mention to Brad Thompson as well. He did get an invite, but he reckons he wouldn't get a word in with you too. So another great friend from the AFR. Lads, we wanted to do just a bit of a wind up of 2023 and not probably step outside the realm of mining specific because you guys cover a lot broader than we do, and we'd love to hear some of the big things that you guys thought of this year and I guess what we can look forward to 2024. So we always start big and work small, don't we, lads? I guess the macro themes, the geopolitical dynamics around the globe these days, East versus West. I guess what caught your guys' attention in that realm this year?
Well, look, I think everybody watched that whole drama play out, and I think we can all see how it's going to lead to probably more mines getting into development. If we're going to have the world split between these two realms, it sort of is going to mean some uncompetitive marginal ones will survive for a while. But as the years gone on, I think a bit of reality's cut in that, just being a critical mineral isn't going to be enough. Ant wrote a really good column yesterday about nickel, with Panoramic going down. Ant will probably talk about that himself, but just making that point that, the status of being a critical mineral probably isn't going to save you from those normal cycles in the industry. And, I often think when I read a research note about copper, for the best part of a decade, any research note about copper has said, well, the next couple of years it might be a balanced market or a bit of surplus. But then after that, a sustained, almost permanent surfeit of copper will exist. And that those days just never seem to arrive. And I don't know, isn't there always going to be a cycle? There's always going to be ups and downs, aren't there? Even if we need, a million tons extra copper a day or whatever it's going to be. So just probably that sense of reality kicking in is one of the things that has really sort of dawned on me in the last few months.
Yeah, so Macca, did you think at the start of the year when Wailu's going so hard for Mincor and, this talk about price bifurcation and nickel sulfide being this premium product, did you think you'd be writing articles at the end of the year about, nickel sulfide operations either going into administration, halting half shaft construction at Cosmos, everything else? Did you think this is where we'd be right now?
Yeah, absolutely. I mean, that's why I wrote it, because, I don't follow the mining sector as closely as you guys, but over the past 15 years, one of the names that keeps coming up in nickel is Panoramic, and it's kind of amazing sitting here on the other side of the country. I mean, we all know this battery metals thing is real, but then to see that one of the last sort of pure play nickel groups that we have left on the ASX go bust, it's really, really quite astounding. And it comes after that scrap for Western areas. It comes after, there was interest in Panoramic itself, comes as IGOs unraveling. It's amazing. But to go back to your initial question, I think Australia is definitely getting close to China again, just from a trade. The wine tariffs, the barley, met coal, I mean, it's opening back up. I know obviously they've been buying 1 billion tonnes of iron ore and keeping Australia afloat for years, but we are getting closer to China again, just politically. But at the same time, you've got, the US with their foreign entity of concern rules. That's very real as well. So I think the East and West story is it's going to be one of the big stories that we'll be writing about for the next 10 years or more.
And on that point, I think one of the things that I think is interesting, we've all got very excited about the IRA, and justifiably so. It's not often someone does a policy worth $500 billion. And, Australian miners are obviously going to be able to play in it. But it's interesting to pause and think, how valuable is IRA compliance going to be for an Australian miner? If you actually think about it, the benefits will be indirect at best. The subsidies are going to go to the US automaker, who will be incentivized to have a bit of Aussie minerals, but, that's still going to be subject to negotiation. And if you're a pre-revenue lithium developer, the sort of situation that, say, Core Lithium or maybe Liontown were over the past 2 years, there's still going to be a power imbalance there. You're still going to be a pre-revenue company. And sure, you might, there might be a little bit of extra cream there, but how lucrative is it actually going to be? It's going to come down to how good a negotiator you are. And you might have seen Peter Coleman's comments last week, the Allchem chairman, saying that with their Mount Catlin mine in WA, which probably is IRA compliant, they're not going to bother. They're just going to keep selling it to China, where they've got an established customer, the shipping route's shorter. So that's kind of interesting, right? The subsidies aren't going to be generous enough to warrant the extra effort for them to get it to the US. So,
did you say that yesterday, JD? You might get an extra 10%, but it doesn't help when the price is halved.
If it costs you, double as much to produce, then a 10%, kicker on the price you receive isn't going to save you.
No.
Peter, you made the comments about copper earlier, and it reminds me of a chart we sent out a week or so ago, and it's got the demand-supply gap, and it's a chart from 2014, and it's got,
You love these, Trav.
Exactly like you just said, the supply and demand are sort of hugging each other for the next 3 or 4 years. and then supply drops off, demand just skyrockets, and here we are 10 years later. It hasn't happened yet, but maybe it will happen in the future. There's another, on the theme of big issues, you guys speak with a lot of these big company CEOs, and something we were speaking about a lot when we started the podcast, it was a massive theme in 21, 22, was all these companies wanting to go downstream to capture the value. I'm keen to hear from you guys whether you're still hearing as much noise. You know, we've heard, you know, stories. Chris Ellison is an example that sort of comes to mind. He's become very much more focused on just getting the rock and, you know, keeping it simple, knowing what he's good at and just getting the rock, sending it off to China. Do you think the theme of Australian companies trying to go downstream in any sort of way, shape or form is sort of fading away and we're going to realise again that we're just really good at mining the stuff and sending it off?
It's a fair chance. Yep, it feels that way. It feels like it's rapidly going out of fashion, which I guess is what, you know, people like BHP would spend much of the past decade doing, right? Like they sort of think that what BHP was in 2011, there were alumina refineries and going even further back, steel mills. They've consciously over a couple of decades tried to get all that stuff out of their business so they can just be this upstream producer. And yeah, it sort of felt like this sort of that talk that you mentioned a couple of years back about downstream. I think it was also influenced by COVID, and you know the world kind of had that moment of wanting to onshore domestic manufacturing again. So a lot of these Rust Belt assets suddenly were fashionable. You know, these things the government had propped up for a long time. But yeah, like all the independent lithium miners, I mean, you would have heard their commentary. They're all going a bit softer, maybe intermediate processing, that sort of stuff. The really interesting one next year will be BHP and Nickel West. Given the challenges in nickel at the moment, looks like it's going to be a pretty tough few months in nickel in WA. You know, a BHP is still going to go ahead with the expensive works they need to do at Kalgoorlie to sort of upgrade that smelter there. Maybe they will, but it's a harder decision than it might have been 18 months ago because nickel's not quite as fashionable.
Well, I think, yeah, next year will be the decision time, won't it? Because I think it was scheduled for 2026, wasn't it? Yeah. And that's when Nova's going to fall off for the clean con supply that's going up there, and then, you know, Wyloo Mincor, that's up in the air as well in this environment. So they're not going to have, they've only got the low quality, low femgo stuff coming out of Mount Keith and Leinster that are going to feed that smelter.
I think that kind of theme is a bit related to another huge one that we saw a lot of this year, which is it's been a bit of a year of a profitless boom, right? Like the commodity prices in some commodities have been pretty elevated, but you've had this underlying amount of cost inflation throughout, which has really eroded the margins of these companies. They've become distressed. In some cases, you've got the commodity in your face, like Panoramic, and hence your article. What do you think of any continuation of that theme in going forward, and how do you reflect on it this year, guys?
But it's going to be really interesting for next year. Like you're right, I think it's made it harder, right? Developing projects is just harder. So what I'm constantly hearing at the moment, I mean, including on your podcast, everyone's just running around saying if you've got something that's up and running already, like it's more valuable than ever. It's so hard to develop something. It's hard to raise capital for it. It's hard to do it on time. It's hard to do it on cost. I don't see how the cost pressures are going to go away though. You know, like we apparently need all these new mines for the batteries boom and energy transition and everything. And it feels like it's going to be a pressure we've somehow got to learn to live with.
What about Macca? You don't mind a good old billionaire, don't you? You love the behaviour of these the Christina Twiggy folk. We don't. Well, you might have to be careful what you say because they might sponsor some of your award nights or something. But what do you think about the whole? Their involvement in mining, but then going down retail between Dryzerbone, Akubra, RM Williams, like everything. Have you, in both your journalistic careers, have you seen this sort of thing play out with these big wigs in Australia?
How long have we got?
We're not sure if it's just because the first year we've been talking about like stuff every day, or if
we start at a great time in history,
or is this year just a weird year for billionaires?
You nailed the timing of this podcast.
like we're really dealing with some rare individuals. Yeah. You know, they do things differently. They're mavericks. You got to respect their track record, and you know, Australia really, really needs them. But if you just look at Gina Rinehart and Twiggy Forrest, and say Mrs. Forrest as well, they're so uniquely placed, like throughout history. Like look at Hancock Prospecting's accounts, right? So it's got $19.9 billion in cash at June 30, making $5 billion of profit year, $4.6 billion in operating cash flows. Boy. Like think about that. So you're $20 billion of cash, and you got $5 billion a year coming in operating cash flows. Like there's no debt, no banks, no nothing to worry about. Just she's so uniquely placed through history just to do what you want. I mean, can you think of anyone else who could have sat around a whiteboard and mapped out their options like she can?
And that's literally what they do by the sounds. Can you, in history, who would you compare it to? Are we going back to, like, in terms of, like, these big figures, what they're buying and the control they're getting? Is it like going back to Alan Bond?
Maybe the oil barons, Matty.
Yeah.
Back in the day.
These guys put Alan Bond to the wayside,
Yeah, Bondi's like got the banks and that to worry about. So, I mean, and the Forest is the same. So, you know, they've got their capital base. That's a $30 billion stake in Fortescue. And then they're sort of getting $2 billion a year or so just from Fortescue. And then they got in all their earnings on their other investments, assuming they are making earnings there. Like these guys are just uniquely placed. They're going to get bigger and bigger. Their war chests are getting bigger, and they're diversifying. And
I'm not sure. I'm not sure about you guys, but I think I've learned a lot about, you know, human behavior and how it doesn't really change if you're a billionaire.
It gets worse.
One of them buys RM Williams, the other one buys Rossi boots. You know,
there's still two children.
You still got envy. You still got FOMO.
I do feel like as we sit here, what is it, December 15, sort of end of the year, wrapping it up. You know, Fortescue's been just such an incredible. I guess the Andrew Forrest story, Fortescue's one subset of it, has just been one of the incredible things to watch this year. And of all the controversies, of all the troubles, and we could list them, but we probably don't need to because your audience is familiar with them. We get here to December 15, and we probably have to say Andrew Forrest's having the last laugh, right? Like Fortescue shares are at record highs. And, you know, part of that whole narrative about the pivot into the clean energy stuff was that it was going to be happening at a time when iron ore earnings were going lower. So how were all the financials going to work? Well, the financial is going to be a fair bit easier now that iron ore has been at, you know, 130 rather than 95, where many of us thought it might be. You know, they've done the Gabon thing. And again, your audience are, you know, an informed audience about mining, and most of them can probably see that's not a productive way to export ore out of Gabon, like with that clam thing they had in the photos. But credit to them, they met their promise, they did it. There's probably some political capital for them in Africa for getting that first shipment off before Christmas, regardless of whether it was profitable or whatever. I just think like they, after such a turbulent year, will probably be getting to the end saying, actually, we're not too badly placed here, you know?
It's a great point. We spoke with a bunch of fundies yesterday. We put up a show and we asked for predictions going forward. And on the bearish side for commodities, more than a couple said iron ore.
I think they all said it. Was it?
Majority did, yeah.
But I think if we go back 12 months, you know, there's a good chance people would have been saying that as well, and 12 months before that as well. So I think last time I looked, it was US $137. These guys are producing at like a quarter of that or something. The cash flow that they're making is phenomenal. But in the face of the China narrative, the property market's slowing down massively. We all know how important the property market is in China. What's the sort of, you know, the scuttlebutt you guys are hearing about where China goes from here? Because it's just such an influential player in the world of commodities.
Wouldn't pretend to have any great insights other than the people who I speak to who do have insights seem to feel pretty comfortable. Like,
your secrets are safe with us, Curry, if you want to let him out.
Okay, that's just us talking. Yeah. No, they seem pretty relaxed, I've got to say. Look, even the lithium guys are a bit sort of quietly confident about, you know, the notion that this lepidolite thing will sort of all explode and be shown up and they'll be vindicated. I mean, that'll be fascinating to watch as well.
Yeah, I mean, if you're going to speak to the big miners at the moment, China's their biggest customer. But I reckon of the first 5 things that you talk about, China's not one of them. So to Pete's point, I think they are feeling quite comfortable about it all.
I think it kind of ties in with a bit of a thesis I'm playing with, which is that we're kind of past the peak ESG investor kind of dynamic, and I think that was strongest late 2021 when every green stock was sort of mooning, and anything with a green tag on it was just the hottest thing, and it's informed a lot of the capital flows in this industry in a big way. And I almost think with the cost of capital dynamics changing a little bit, there's a much more focus on actual cash flow, and that's lent itself towards the kind of energy stocks and the likes, which and you guys have talked about a lot of this stuff in a lot of the green energy markets, ex commodities as well, like the renewables infrastructure and the like. So I wonder if you guys are aligned in thinking, have we seen peak ESG investor?
I'm not sure about peak, but I do agree that 2023 has felt like the year that a real pragmatism overlay was put on ESG, perhaps the what might have been idealism sort of 18 months ago. If you think about some of the headlines we've seen this year, the UK PM Rishi Sunak has watered down some of their climate targets, like the end of the internal combustion car was supposed to be 2030. I think it's now 2035. And there were 2 or 3 other similar things that he did that effectively were watering things down. We've seen BP and Shell and a couple of the other oil companies relax their targets, whether it was, to reduce oil production annually or their actual just carbon targets. I think BP halved their carbon target for 2030. And even in New South Wales, the New South Wales government in the past couple of months sort of coming to the realisation, actually, we're going to need those coal-fired power stations in the Hunter Valley to run a bit longer than we previously thought. And I do think that there's a little bit of an element that once somebody broke the line, I think there were a lot of executives who felt they had a bit of cover to now come out. Coming out 18 months ago and saying, "Oh, actually, we're going to abandon our carbon target," you would have been, thrown off the bridge. But these days, enough of them have done it. They're getting more confident to do it. People, even those who are maintaining their carbon target. So Rio Tinto last week, they've kept their 2030 goal, but they say we will spend less to get there. And the interesting thing for me was they said their fleet replacement in the Pilbara was now likely to be after 2030 rather than before 2030. And, over the past few years, we've laboured under this idea that BHP and Rio were probably going to have a big fleet replacement cycle sometime around 2027, 2028. And that's when you'd see this new generation of whether it's battery electric or whether it's the trolley assist, which is, where basically you've got haul trucks running like Melbourne trams with overhead power lines. That was all going to come before 2030, but Rio have now pushed that back to after 2030. So, yeah, I do feel like there's been that sort of pushback this year. But whether we've seen the peak of it, I don't know. I mean, COP this week still took yet another step forward. I think it'll probably just sort of come and go in cycles. The US election will be a big pivot this time next year on that, right? Like if Trump gets back in, then clearly there will probably be a few steps backwards, particularly if he decides to gut the IRA.
God, isn't that a topsy-turvy?
Yeah. I mean, at the risk of getting cancelled by you and your audience, if I can just take you out of the mining sector just for 1 second.
Oh, mate, we are at your disposal, mate.
We're open-minded. We're open-minded.
No. So if you look at that, like ES&G, the big stories of this year, just in corporate Australia more generally, they're much more around the G at the moment, the governance bit, right? So look at the Qantas story, the PwC TaxLink story, what's happened to the casinos and everything. It's all about the governance. So, I mean, the E is still very much there and it's always going to be there. I mean, look at like Santos and Barossa or Woodside Scarborough or whatever. But it's just not as strong in investment markets at the moment as probably I'd say is the focus on G, which is the governance. So, I mean, if you speak to one of the big miners about their roadshow post results they would have had in September when they went over to Europe, and Europe is the home of all the E questions normally from investors. I mean, they'll tell you that there was much less focus out of Europe on the environmental stuff this year compared to last year and the year before. So I mean, so the ESG is definitely there. It's not going away. It's just that the focus has changed a little bit at the moment.
And the New Hope coal boss, Rob Bishop, in September, he also said that on his visit to Europe to meet investors, he happened to meet with insurers because, there's been this issue that insurers won't insure fossil fuels. And he said it was the insurers over there were far more willing to engage with their company, predominantly thermal coal, than, barely a year, 18 months earlier. So I think it does speak to that sort of slight pushback, that slight bit of extra pragmatism.
The G is something that's near and dear to our hearts, and you mentioned a few cases there, and we spoke about Whitehaven was a big example throughout the year in the realm of mining, where G played a big role. I'm keen to get into some of the big deal themes that we spoke about over the past year, and the elephant in the room when you speak about deals and deal themes is minority stakes blocking deals. And you covered it in a big way with Origin, a bit out of our neck of the woods, but, we're talking like Liontown, Azure. It was massive in the mining world. So I'm keen to hear, firstly, given how closely you followed that Origin story, how it sort of, what the repercussions are now of somebody having a 15% stake and being able to just shut down a $20 billion deal is, what that means for getting a deal done going forward.
Yeah, it could have really big implications. So, I mean, the way that all the deals have been done sort of over the past 10 years, these schemes of arrangement, and the reason the bidders like them is because you need a 75% vote for. And if you can get 75%, you get the whole company. There's no minority shareholders holding out or anything like that. So it's binary. You either get the company or you don't. But what we're seeing, though, is these people getting minority stakes and then voting the schemes down. And it turns out if you have 10%, 12%, 15% going into a scheme vote and you want to vote it down, you're a pretty good chance because not everyone votes at the meetings. It's really hard to get everyone to turn up on meeting day. So definitely this year, the rise of the blocking stake has sort of cast a cloud over that whole scheme of arrangement style of doing takeovers. So I definitely think next year we'll see bidders sort of rethink things a little bit.
Historically, has there been many more cases where that has been the cause of these deals getting blocked, or is it just more apparent this year because there's so many of them?
We've never seen an Origin situation, right? So you've got a board who's recommending shareholders accept a bid at, $9.50, $9.30 a share or whatever. And they're telling shareholders that this is as good as it gets, take the money. And then you've got a big shareholder that says, not doing it. And then the whole thing falls over. Like we've never seen it on that scale. And I mean, in terms of like, even on a Liontown scale, it's really rare that we've had someone come in, buy a blocking stake and blow it up.
And if I can throw a question to Ant, because, for your audience, if you're not familiar with Ant, for the past decade, he's done the AFR Street Talk column, so lived and breathed M&A. Like, Ant, is the scheme of arrangement, if it's going to be out of favour, what's the alternative? Like, how could deals happen next year in a different way? Or does the government need to change the Corporations Act is 75 too high a number? Like, should it be 60?
No, I think 75 is good. I mean, if it's 60, if you're selling the company just because 60% of shareholders want to sell it, selling the whole thing, for me, that feels like it's tipping things too much in bidders' favours. I mean, the alternative is bidders can just go to shareholders with good old-fashioned on or off-market takeover bids.
So essentially what Azure did, they said if the scheme fails, it's an off-market takeover.
That was a dual transaction structure, which is a nifty way to get around it, yeah.
Bankers get more creative.
Yeah, so bidders have just got to run the risk that maybe they end up with 50%, 55, 60, 65 and not being able to own the whole thing and cut deals with minority shareholders. All that stuff is a hot topic, in the Collins Street Towers in Melbourne, the big investment banking towers here. It's as the year draws to a close, that deal structure's red hot.
I suppose that'd be pretty. You see the Genesis Dacian thing probably a bit more often because of that, because you end up with this prolonged company with a majority shareholder with, say, 80%. They haven't got to the 90% compulsory, but then there's a separate deal that comes about to get that final chunk over the line to make a bit of a neater corporate structure. So that might be something we see more often.
Yeah, it's all right for strategic buyers. It's really hard for the financial buyers though. So you know, private equity firms, your Brookfields or whatever, because they have, you know, huge debt packages lined up to buy things. So because they're normally pretty leveraged bets. So they need certainty that they're going to be able to own the whole company and run things on their terms, completely reset the capital structure just to make the deals work. So if for them coming in owning 50% won't really work for them.
I wonder if the other super funds around Australia have got a bit of an idea now that they've seen what Oz Super have done, and they know they're getting more and more capital, and the way their coffers are going to fill up over the coming decades, they might feel like the real masters in the realm of M&A.
There's a sub-story there in the influence that these super funds have on our capital markets as well. If I were to make a prediction for 2024, it's that'll become a bit of a story in and of itself.
Because do you think Oz Super's going to, like, what have they got, $200 billion war chest?
I think 300 last time I looked.
Yeah, so what do you think they're like, an organisation like that's going to become a pretty influential player in the market, as Trav said?
Mate, they'll be at $1 trillion by the end of the decade.
Yeah.
Right. And they don't even have to go up and really market and hit people up for money like most of the fund managers you spoke to yesterday. You know, like they've got $20 billion in inflows coming in the door. Right. So yeah, mate, they've been the biggest change in Australian capital markets in my 15 years here, for sure.
Yeah, wow.
Yeah. Well, mate, given you're the M&A expert, Anthony, we're going to keep talking deals because we love it too.
See how we got Origin in there for you straight up, mate. Tickle your whistle a bit.
Yeah, I'm curious to know, just from your lens, what more from the deal landscape have you observed this year in 2023 that's been a bit intriguing from your perspective?
So we've seen some pipsqueak activists pop up on the radar.
Yeah, 100% right.
Good on the Whitehaven.
Yeah, mate. Bloody hell. That was interesting, wasn't it?
Yeah.
That was really interesting. Yeah. There was a lot that was interesting about that, because it was an activist agenda to prevent a deal, which then turned into an activist agenda to vote down a REM structure. But it was a London hedge fund which would always put their name to the words, but never their face. And you could never find out who this Mike O'Mara guy was.
I think there's activists and there's activists, right? So if you think about Elliott Management, you know, the big New York fund who took on BHP and a lot of other high-profile targets, I get the vibe that those guys study a situation, pick their entry point, and it's all very well mapped out. Whereas with Bellrock and Whitehaven, I got the vibe this was an organisation that bought shares and perhaps hadn't done enough homework. Like, I've listened to every Whitehaven quarterly call for the best part of a decade, and they've always been wanting to buy stuff. They've always been talking about wanting to get into met coal more. They've always been talking about wanting to get into Queensland more, so they're not entirely reliant on one railway line. The idea that there was some change in corporate strategy is not right. But Bellrock felt there was. So I feel like they bought these securities thinking that they were just going to cream all these massive dividends through the coal boom, and then pivoted to an activist strategy when they realised they'd made a bad call. That's my gut vibe. I could be wrong on that. And while we're talking activists, I've brought something along because I felt a bit hungover after the AFR Melbourne Bureau Christmas party last night. I thought, how am I going to get through this? So I needed some props to get through. So you mentioned activists. I brought this along. Can you see this? These are collector's items. This is a baseball cap.
Make BHP. I thought it was make Monono great again, and I just had PTSD.
So I mentioned Elliott before. You remember, like 2017-ish, Elliott took on BHP. Around that time, Tribeca, the guys at Tribeca in Sydney, Ben Cleary and company, they piggybacked off it, but with actually a better strategy. And they made these caps, and I think a few of the team even turned up to the BHP AGM in Melbourne. Wore these caps like naughty schoolboys down the back of the room. So this is I mean, I'm not saying BHP is not great. So BHP media teams don't call me.
Ben Cleary's great. Love that bloke.
Pride of place.
On Whitehaven though, so just think, like, if it was Australian Super that had that stake and was lining up against Whitehaven, that would have been a much harder deal for them to do. But the fact it was Bell Rock, the fact that we didn't know much about them, they didn't have much track record here, we didn't really know their motivations. I mean, from where I sat, I thought they never really had much wind in their sails. The Whitehaven board really wasn't worried about them, which is almost a shame, right? Because there were some underlying issues there. There were some good issues. The stuff about the REM report, the pay. I mean, you guys went through it on your podcast. There were some real issues there. I just think it was the wrong face.
I got a bit of a different perspective on it now that time's gone, and I think some of the stuff that's popped up in the takeovers panel and all that sort of stuff is that Bellrock had this derivatives position in Whitehaven, so they were leveraged long. Essentially, is my read of it going into the release of the announcement. So I think, and I was always kind of convinced that the risk reward in Whitehaven was so asymmetric. It was like whether the deal was going to be announced as a good deal or a bad deal, the stock was probably just going to go up because there was such this big M&A overhang. How are they going to fund it? All these questions of they're going to raise equity, so much uncertainty. So the stock was underperforming because relative to peers because of this M&A overhang. So as soon as the deal was announced, they absolutely, Bellrock minted it. They made shitloads of money because they were levered long, and they closed out the derivatives position shortly after, and it opened on announcement 16% up. So think of all that campaign. They actually just had an incentive to make money. That's all they had, and they made heaps of money. So part of the campaign might have actually just been to create maximum fear out there for the M&A overhang as possible, create noise, all that sort of doubt. And then just close out their close out their long position at the end, which it looks like they did, and make shitloads of money, which they did.
Yeah, no, I mean that all sounds reasonably sound to me. And they turned up to the right company, big cash war chest, buying something that made a lot of sense. As Pete said, they've been talking about this for years. So I mean, the deal was always going to be on the cards, and they just created enough sort of noise around it.
Curry, what do you reckon about the Newmont Newcrest Super Gold Co that's come out? It's gone through, completed last month, $26 billion price tag. I guess where what are we going to see? Some assets coming out the arse end of it. Where's the value for these two entities combining or recombining, you'd say?
Is the CDI going to trade at all?
Well, I find the CDI is quite confusing, actually. So you guys with your background in corporate finance might be better than me. But look, I gather that the assets that come out of it might be more likely in the short term in Canada rather than out here. I mean, it could be proven wrong. They're sort of pitching this narrative to the local big investors that they are a replacement, not just for Newcrest, but for Oz Minerals, so it's really talking up that copper vibe. I think what I did find interesting as that deal was coming to a close is that some senior former Newcrest people who had, departed in recent years were sort of saying to me, these guys are getting away with it very lightly. Like, they're getting this thing damn cheap. So that was the honest view of people who were extremely familiar with Newcrest and their assets over the past decade. So look, how do they go? I don't know. CDIs rarely go well down here, do they? So it's going to be tricky, but Tom Palmer has genuine sort of local connections, born in Broken Hill, grew up in Cobar, deep family experience. So he's going to be able to credibly talk to an Australian audience more than a lot of these companies have had CDIs, I think. His uncle was a previous CEO of Newcrest. One of his other uncles was a director of Newcrest. He himself, worked on some of these assets previously. So, look, I think it's going to be a test case, isn't it? It might be the first CDI that really latches on and that people actually accept.
Which companies do you think are going to get, whether it's the beneficiary or the purchaser of any assets that come out the arse end? Because, Telfer springs to mind as it's not classed as one of their tier one assets due to the mine life. Who do you think will be on the cards at having a look at all that sort of stuff?
I think that British Columbia stuff that they've put together, Newcrest had Red Chris and Newmont had other stuff in British Columbia. That's absolutely core to Newmont's future. They love that. They reckon that province is the next big thing. So that will be staying. But yeah, some of those older assets in and around Ontario, wouldn't surprise me if they go. We wrote a story earlier this year about how one of those mines is very old and quite marginal, and they actually built it. They had to bulldoze the Shania Twain Visitor Centre. Are you familiar with this story?
Oh, first album I ever got. Love Shania Twain when I was 13, 14.
She's from Timmins, Ontario, and the local town built a visitor centre with almost like a presidential library for Shania Twain. And they filled it with all her memorabilia, but it didn't really work as a tourist attraction. So they bulldozed it, and now Newmont,
even though it's bulldozed, she's still the one.
Yeah.
But to your question, I think a little almost like AFL Trade Week, right? Like there's certain clubs that just seem to trade well, like Fremantle and Melbourne have always just seemed to be able to do deals with each other. It seems like Evolution seems to be, for whatever reason, pretty good at doing deals with Newmont. So it won't surprise me if eventually Evolution picked up a bit more Ontario stuff to go with Red Lake and the stuff they're trying to make work over there.
Bit more leverage wouldn't hurt Evolution, eh?
It was a sad deal for the ASX though, Newcrest, Newmont. I mean, this was our big gold miner. Had lots of big global money, passive funds and everything on the register. I mean, the fact that there's a secondary listing here, I know, but I mean, all that big passive money, you want to go to the big liquid listing, right? That's offshore, not here in Australia. So, I mean, that deal had been on the cards for ages. It was all about the stars aligning. Newcrest had some problems. Newmont pounced. I mean, it used to own Newcrest. It's started it, right? So, but I think it is sad for the ASX.
My observation is that I felt just in the circles I move in that there was more sort of emotion from people, or sentimentality and nostalgia about Oz Minerals getting taken up, because Oz Minerals is a company that people leave and just seem to love the place. And, people still talk about WMC with this sense of pride, like I'm ex-WMC, and they loved it.
Yeah.
Newcrest, I don't sense ever really developed that positive culture. And even like the shareholders, when the deal came out, like it wasn't a knockout bid, right? It was almost like most of the shareholders were sort of happy to be rid of it, rightly or wrongly. So I think, Ant, what you say is true. And Ant has talked a lot in his columns this year about the idea of the shrinking ASX, and Newcrest sort of part of that. So for the ASX, it probably is a bit of a blow. But yeah, it doesn't strike me that 15 years from now, people will be having Newcrest mining reunion parties the way WMC people seem to still do.
Well, about Oz, you mentioned Oz Minerals. Where do you think this puts BHP now that they've actually claiming they mine uranium, because the uranium price has gone up so much, and then because the big thing with Oz Minerals was the fact that they could now mine the higher uranium radioactive areas of the Oz Minerals, blend it all with this Olympic Dam smelter, and I guess creating, something that Oz Minerals couldn't, because they had to be selective in what they mined. Does this pose, if this copper thing happens and uranium keeps going, I assume that hub's going to be pretty essential to BHP. They're going to make a bit of dosh out of it, which they haven't so far out of Olympic Dam, from what I know.
Yeah, I think, aside from, no doubt they hope and have a strategy for getting synergies there, but there's no doubt that I think BHP people would also like the fact that this deal sort of scrambles the egg in the South Australian copper, and it will be harder for us in future to judge Olympic Dam the way we've been able to over the past few years. We've been able to see that, return on capital employed over a decade is, zero or less than zero. So I do know ex-Oz Minerals people who are taking bets with one another as to what date BHP will report an impairment on Oz Minerals, because they feel like they got a pretty good deal. But I think, and there is that question mark for BHP. I think you've sat next door to this thing for a decade. Not a huge amount changed at Oz Minerals in that decade. For a lot of that decade, the shares were $5 to $10. You bought them at 29. So that is going to be a question mark for BHP for a while, but BHP can afford it. It concentrates. It's probably the lowest risk acquisition they could have possibly done in the world. And I don't, even though they possibly paid quite a high price, I doubt they'll regret it. I don't think in 25 years they'll be sitting here lamenting the Oz Minerals deal.
No.
If this thing comes off, they will own South Australia. Like, seriously, it'll be huge.
And one lovely little aspect of it, which will be fun to watch in the new year, is that in buying Oz, BHP inherited this option over the ASX-listed company Havilah Resources.
Oh, yeah. I know about that, yeah.
So Havilah, I've got this tiny, I shouldn't say tiny.
Yeah.
Havilah had an early stage copper prospect, 50 Ks west of Broken Hill. So as a journo, I'm just barracking for that narrative about, BHP is coming back to Broken Hill. And they're going to, I think the decision needs to be made by March one way or the other. So it's going to be an easy thing for BHP to say, it's too small for us and we're moving on, no thanks. But fingers crossed, imagine that, back to Broken Hill.
There's a story, right? I can imagine the title already, Pete. There it is.
Oh, I love it.
So we should.
Hold on, just while we're on M&A, do you want some cheap views on Woodside Santos?
I was just about to ask you, Macca. You read my mind, mate. Jeez, look at AFR money mine just intertwined.
Well, mate, it's an $80 billion deal. For me, this one feels like there's a lot to play out, and it's like something's going to happen, but it may not be what we think. So you've got two very different sets of shareholder groups, and for these nil premium, low premium mergers to work, you need both sets of shareholders to see the attraction. Right now, Santos has got these institutional investors that think it's really undervalued, and they want the company to create its own value by doing stuff. Does that mean selling to Woodside and taking Woodside's maybe fairly valued scrip? Probably not. I reckon they'll be pushing for some other sorts of potential value creation things. Which do
you think Beach?
Which means
Beach
deals.
Is part of like a three, there's a bit of a tie up with Beach and Santos assets, or there's a something along those lines, Anthony?
Maybe. I reckon in the near term. So Santos has obviously got shitloads of bankers working on this, right? I think they've got 3 or 4 sets of bankers. The bids are going to be coming in for different parts of Santos. I reckon they'll think about those. They'll think about the whole separating to the LNG company and the domestic gas business. I don't know. I don't know which way it's going to go. I just feel that in Woodside and Santos shareholder groups, you got 2 very different groups, different shareholders on both sides. For example, like if you're Australian Super, you probably only really own one of the 2. You own Santos because you think it's really undervalued, or you own Woodside because you like the bigger is better sort of thematic. And I think they're more in the Woodside camp for what it's worth. I don't know. Watch this space.
Well, I think it plays into this theme that we've seen in the past couple of years in fossil fuels, right? Which is the idea that consolidation has to happen, because if you are going to play in that realm, you might find it difficult to get finance. Therefore, you need scale, cash flow to build projects, all that sort of thing, right? So that's fine. And that theory's been playing out. All the oil majors have done more deals this year, BHP, Woodside, Santos. But eventually that trend is going to run into an antitrust brick wall, right? Like some of these companies are going to get so big that the Japanese or the Koreans or whoever are going to say, sorry, that merger will have too much of the, 6,000 kcal coal market. So no, it can't go ahead. And we've got Glencore wanting to put its coal with Teck, put it out on New York Stock Exchange. That's going to be a big thing. So I think if you're a coal company out there or an oil and gas company out there, and you reckon you would like to be absorbed by gravitational pull into one of these big behemoths that are getting created, you want to go sooner rather than later, because you might miss your window when antitrust starts breaking down and saying these things are just too big.
Well, I reckon we go a bit of predictions for 2024 to finish it off, lads. Mac has got 5 minutes left.
Let's do it.
Later away. I've got a curly one at the end.
All right, well, let's start, right at the big end. Macro predictions. Interest rates, where are in Australia first, the RBA, where are we going to sit in 12 months' time?
I think we sit where we are now. Not too much lower, maybe one rise higher.
Pete?
Yeah, I think one rise higher.
So we're
not going to, it's not like he's going to get held to it if it's wrong. So it's all good. We won't write about it.
You're going firmly against what the traders are pricing in at the moment. A lot of people are anticipating cuts, but they have been for a while now. So that's interesting. Getting into
tell me this, like, what's the cost of a beer in Perth at the moment?
Oh God, $13 a pint down the road.
Pint. Yeah. Well, A, that's because you don't have pokies, but B, like, it's a lot, right? And people are still paying for them. There's still money out there.
Yeah. So trust me, I'd rather pay $13 a beer than slapping 50s in Where's the Gold every night. So it's better for me.
All right. So next one might be a bit more focused at you, Pete, looking in at the mining space, but we've seen a lot of the attention in the mining space focused on producers. Do you anticipate the explorers or developers getting, greater access to capital, greater attention over the coming 12 months?
No, I don't think it's going to get easier. I think if anything, it'll probably still be okay, but probably get incrementally harder. With that, the data has suggested that over the past 3 to 4 quarters that it's not quite as easy to raise capital as it was, which probably points to consolidation, I guess. I gather from, the exploration sector is as vulnerable to inflation as any other. Like, the cost of getting a drill rig is probably higher than it was a couple of years ago. Stand to be corrected if I'm wrong on that. But I don't think that's going to get easier. But fortunately for them, most of them have still pretty good cash levels. So I think they've got a bit to go. They can survive for a bit longer. I don't think it's going to be necessarily tough times in there.
Anthony, what about the deals? Got any predictions?
Oh, juicy.
In terms of targets,
targets,
or
everything.
Well, I mean, I think we should look at our favourite deal makers like your Genesises and Develop Globals and that to stay pretty active.
Oh, the ones that have good relationships with the AFR.
The ones that have good relationships with financial markets. Know how to get stuff done.
What about user in tune with all the polys? Mate, but on both federal and state level, do you think Labor are going to be forced into going a bit more towards pro-nuclear, pro-uranium mining with the pressure being and all the stuff that's out there at the moment coming from the Liberal side?
I don't think federally they will. I think Chris Bowen has taken a particularly strong stance on it, and it would just be too hard for him to politically to backpedal this term. It's pretty interesting though, right? Like, the Resources Minister, Madeleine King, her electorate is in Brand, down around Rockingham and stuff there, south of Perth. Her electorate is going to be home to the nuclear submarines. So, if you're going to have an SMR, that could be one of the spots to do it theoretically. But no, I don't think so. I reckon on the politicians, the thing to watch will be, the IRA has hogged the headlines, but I think the Defence Production Act in the US, we'll hear a lot more about that. And we might, in a decade's time, look back and think that the reforms to the Defence Production Act, where Australia got considered, is about to be made, part of the US effectively, for procurement for the US military, might actually be more meaningful for the Australian mining industry than the IRA, because the IRA has sunset clauses, right? Like, if all goes to plan, the IRA will gradually phase out, whereas Defence Production Act could be permanent. So if you're a Northern Minerals or a rare earths producer, you could be selling into the US Navy forever, conceivably, under that.
Beautiful. Macca, 8:30 on the dot, mate. Have you?
I got one more. I got one more I want to get into here, Macca. We've spoken with a lot of fundies over the past year, and a lot of them are playing into this mean reversion theme where the small and the mid caps are going to get more capital. We've been seeing a few funds specifically targeting this opening up. Do you put any stock in the idea that these small and mid caps that have underperformed over the past 3 to 5 years are going to have their day in the sunshine over the coming period and sort of relatively versus the large caps perform better?
Well, their day in the sunshine is overdue. But I heard all this at the start of the year as well, and we're 12 months on, and these guys are hurting hard still. So, I mean, I feel for them. It will change, but, you know, mid-caps, just in terms of, like, what's hot and that, like all the fund managers are raising mid-cap funds at the moment. I reckon I know probably four mid-cap funds that are in the works. So, I mean, yeah, and it's all based on this large caps have outperformed, so invest with us, we'll make your money in mid and small caps. It has to revert at some stage, but, mate, good luck picking exactly when, because it's been painful to date.
Yeah.
And on a similar theme, like, I think it's fascinating to watch those mid caps who are a pure play to a particular industry. So, you know, Jervois in cobalt, Syrah in graphite, and even Illumina Limited, those with the pure exposure. All of those three that I mentioned are right in the doldrums.
Yeah.
And historically, we've seen that it takes, you know, a flooded dam or a burst pipe or some sort of unexpected black swan event, and those pure plays just have this exponential boom. So clearly we're not giving anyone financial advice here, but I find it intriguing that those guys are in the doldrums, and will we see some fund managers take really brave positions in the next little while based on the idea that they might be buying somewhere near the bottom?
Awesome.
That's a pretty contrarian one.
Lads, thanks so much. We've got such high respect for you for the articles you write, and we really, really appreciate coming on the show, and we want to wish you a Merry Christmas from the Money and Mine team. Great to have you on.
Thanks for providing us with great content all year.
Appreciate it, guys. Thanks for coming on.
No worries. Merry Christmas, and thanks for keeping sort of metals and mining at the front of my head as well. Listening.
Can I do that, Ant? What am I?
Hey, lads, feel free. I'll give you my number after this. Feel free to ring me when I make all the mistakes and just correctly inform. So I'm all ears. So.
All good.
Cheers,
And
guys.
can I just... Do we have time for me to put a pitch in for Brad Thompson, the AFR's?
I better run, boys.
You're right. Cheers, Macca.
Cheers, Macca.
Merry Christmas, mate.
Some of your audience might, read some of Brad Thompson's articles, or they might even get interviewed by Brad Thompson. Anybody who gets interviewed by Brad Thompson, I want you to ask for a jar of honey, because a little known fact about Brad Thompson is he is WA's #1 amateur apiarist.
Is that right?
What a fun fact.
He has hives, and he knows how to use them.
Wow.
There you go.
Mate, Brad, if you're listening, we're all up for an invite for a live potty at your honey farm, as long as you supply the beers. That's awesome, mate.
Perfect.
You just never know what. Some people are like a box of chocolates, aren't they?
Beauty. Thanks for making the time,
guys.
Pete.
Curry,
it's been awesome.
thanks heap for that, mate. We'll no doubt chat to you again next year, and Merry Christmas, mate.
Hooteroo.
Well done, fellas.
Cheers, mate.
Congrats on the show. Bye.
Appreciate it. Thanks.
Thanks, mate. Righto, that was bloody awesome.
Hell
What
yeah.
two absolute gentlemen.
I love talking about all the big themes out there, you know, from China to the foreign entity of concern stuff to investment downstream, all the stuff that these guys are pretty cottoned onto, the deals, everything. It was awesome to get them to come on Money of Mine.
And I'm so impressed how broad their knowledge base is, because they're obviously very well connected, but they have some great insight to we're obviously really pigeonholed in mining, but they've just got I just believe they've got such a great view of such a broader range of a lot of industries. So yeah, absolutely flattered they came on. So it was I reckon after bloody 7-8 months, boys, to get them boys on after referring to them in the first one and really looking up to the articles they do to get them on. That's bloody one of the greatest experiences of the year, I think.
Yeah,
It's pretty cool.
When the bloody I mean, we consume their content all the time, and to hear that they consume ours is pretty awesome.
Yeah, good stuff. Righto, thanks. Merry Christmas, everyone. Final episode of the year. We're scheduled to come back 15th of Jan. Mm-hmm. We might get bored and maybe do a cameo before that. Just come in, do a quick one in the first week of Jan or something. Can't promise, but
Yeah.
I reckon we might.
Matty, should we say thanks to the money miners?
Oh, mate, we talk about the partners, and obviously they've given us cash to pay rent and stuff, but that is all on the back of the support we've got obviously I cop a bit of abuse on YouTube for bloody talking shit or whatever. You can don't care; they can all get fucked. But everyone else, absolutely love you. We've got so many people that have just like been such advocates for what we've done, and whether it's just sharing episodes, positive comments, or just talking to people about it and spreading the word. And we wouldn't have take away our audience. We are fucked. That is simple as that.
100%. It's unbelievable that people listen to us dribble shit on a daily basis. It was awesome to meet so many of them at the
companies pay me to do it as well.
It was awesome to meet so many of the money miners last Thursday at our live event. So it'd be awesome in the new year to keep on meeting the people that listen, and much appreciate people that tune in over the last 8 months of this.
Do you reckon the amount of people we've met and the contacts I think it's a linear relationship with how many bloody episodes we did. I think if it was one episode a week, it wouldn't have done what it's done. The fact that we're committed to one episode a day, which looking back on it is fucking mad.
It's done like 180 odd episodes.
But that was just so many extra stories, so many extra people we met, so many extra people we listened to it, and it was well worth it. Put it that way.
I'll tell you what, Matty, I've learned more in the last 8 months than I did in 3 years of banking.
Yeah, well, I can you imagine how much I've learned about finance, but I would imagine even you two coming from a finance background, that's just exponentially taken your knowledge to another level.
I've learned about mining now. Not quite.
Just focus on the finance. I'll sort the mining shit out. But you got to teach me finance too, because I just want to have a fund and stuff one day. Just to bloody. I just want to go to AGMs. I just want to be on the blower to the brokers and the fundies, just talking what deals are hot, and that is my future.
It's awesome to hear how a lot of the audience have shared that learning experience with us, and they tune in and they talk about listening and learning alongside us, and we hope that we can continue that journey together and with the money miners, bloody for a long time. So we love it.
We're not going anywhere.
We love the audience. Hugely appreciative for the people that tune in, and going to miss you for the next 4 weeks.
I think one of the thing we've learned after talking to a lot of the money miners is just the influence of the show on how they think about investing, rather than just having a punt, or having, this looks all right, or this is getting talked about. I think whether we didn't think we were doing it, but we probably have, just training them to make better, more informed investment decisions. And it's definitely made me make more informed. I've lost heaps less money this year compared to what I used to. I've had heaps of stocks that have gone up and I've sold at a profit. Never had that.
Nice change, hey?
It's unbelievable. So
I think the last people we'll say thanks to is the sponsors who have they've backed us throughout the year, which has been awesome. The first couple, Anytime and Terra. Thanks heaps to those guys, and then.
Who was next out of the ones we've got on the list?
K-Drill,
come on. Yeah. JP Search
throughout the year were awesome. And then
Schmick as well we had.
And then since then we've had InvestorHub, DSI, as we mentioned at the top of the show, McMahon Mining Title Services, Future Proof Consulting, KCA Site Services, Brooks Airways also at the top of the show, and K-Drill.
And obviously Q at the Let's Eat Lunch Bar. We can't forget about him.
On your Q.
On your Q. Righto, Money Miners. Merry Christmas. And bloody, we'll see you in 2024.
Sure.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.